Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and risk management. I'm your host, Louie, and I'm excited to have you join us today. We've got a great show lined up for you with all the latest news and updates from the financial markets. To kick things off, let's take a look at some of the top stories making headlines in the world of finance. We've got two big ones to discuss today. First up, Nuvoco Vistas, formerly known as Lafarge India, has reported a significant increase in its net profit for the quarter ended June 30. The company's net profit rose to Rs 71.64 crore compared to a net loss of Rs 13.52 crore in the same period last year. This is definitely a positive sign for the company and its investors. In other news, Ixigo has reported a strong performance for the quarter ended June 30th, with a 73% year-on-year jump in revenue from operations to Rs 314.5 crore. The company's net profit also rose by 27% year-on-year to Rs 19 crore. This is great news for investors, and it will be interesting to see how the company continues to perform in the coming quarters. We'll also be taking a closer look at the performance of other companies, including Nuvoco Vistas and Ixigo's competitors, to see how they're faring in the current market conditions. We'll analyze the trends, identify potential risks and opportunities, and provide you with expert insights to help you make informed decisions. So, whether you're a seasoned investor or just starting out, this is the show for you. We'll be discussing all the latest developments, sharing expert opinions, and providing you with the information you need to navigate the complex world of finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through our show today, and we're diving into a fascinating topic that's been making waves in the world of finance. As you may know, President Donald Trump has been vocal about his desire for lower interest rates, but his recent threats to fire Federal Reserve Chairman Jerome Powell have sparked concerns among economists and investors. Now, let's take a step back and look at the situation objectively. On one hand, Trump wants the Fed to lower interest rates to stimulate economic growth, which is a valid concern given the current global economic landscape. However, firing the Fed chair could have unintended consequences that might actually push interest rates higher. According to experts, long-term interest rates, such as those on 10-year and 30-year government bonds, are set by investors through their buying and selling of bonds. If Trump were to fire Powell, it could undermine the Fed's independence and lead to a loss of confidence among investors. This, in turn, could cause bond yields to rise, making borrowing more expensive for home buyers, businesses, and other borrowers. It's a complex issue, and opinions are divided on what the best course of action would be. Some argue that Trump's threats are merely a negotiating tactic, while others believe that it's a genuine attempt to exert control over the Fed. As we weigh the pros and cons, it's essential to remember that the Fed's independence is crucial for maintaining economic stability. The central bank's ability to make decisions based on data and economic indicators, rather than political pressures, is what helps keep inflation in check and supports sustainable growth. So, what does this mean for investors and consumers? For now, it's a wait-and-see approach. We'll be keeping a close eye on developments and analyzing the potential implications of any changes to the Fed's leadership or policies. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you've joined us again as we wrap up another episode of Market Insights and Analysis. Today, we've got a fascinating story from the world of mining, where BHP Group Limited, one of the largest miners globally, has reported some interesting developments in their quarterly report. It seems that BHP is facing rising costs and delays at its major potash project in Canada, with estimated costs for the first phase blowing out from $5.7 billion to between $7 billion and $7.4 billion. Now, this might seem like a setback, but it's essential to consider the context. The world's biggest miner is betting heavily on potash, used to make fertilizer, and this project is crucial for their long-term strategy. On the other hand, BHP's iron ore production has reached 70.3 million tons in the 3 months to June 30th, which is near the top of their guidance range. This is significant, given China's demand for iron ore is plateauing due to an ongoing property crisis. Despite these challenges, prices for iron ore have averaged around $100 a ton this year. Now, let's not forget that copper output also rose 2% in BHP's fourth quarter, with the massive Escondida project in Chile achieving its highest production in 17 years. According to CEO Mike Henry, commodity demand globally has remained resilient so far in 2025, largely due to China's ability to grow its overall export base and deliver robust domestic demand. As we analyze these developments, it's crucial to maintain a balanced perspective. While the rising costs and delays at the potash project might raise some concerns, BHP's diversified portfolio and strong production numbers in iron ore and copper are definite positives. In conclusion, the mining sector is always full of twists and turns, but one thing remains constant: the need for investors to stay informed and adapt to changing market conditions. As we close out today's episode, remember that investing in the markets is a long-term game, and it's essential to keep your eyes on the horizon. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.